from the Northeast Georgia Business RadioX studio, it's The Bottom Line with Jacqueline Sheldon. Maximize your return on investment by reducing your tax bill. Get ready for the best tax talk you've ever had. Presented by Bottom Line Tax Solutions. Well, hello, Jacqueline.
Hello, Tom.
How are you?
I am doing great. How are you today?
I am always fantastic.
You always are.
Darn right I am. And many, many other things we won't just go into.
That's probably a great idea. We just move on.
You never know. You never know with me. Good day to be alive.
It's always a good day to be alive.
We're going to talk tax stuff again.
Yes, everybody's favorite topics.
It's kind of what you do.
It is what I do.
It is what you do.
I live and breathe it.
And by being for at least 3 months out of the year, it's actually more than that, but for at least 3 months out of the year, being a tax widower, that is what I am.
You are.
A tax widower. I gain so much knowledge, whether I want to or not, by simple osmosis.
That is true. You've learned a lot over the years about income taxes, even though that's not your profession.
I know enough to, one, probably get people locked up.
That's true.
And sound really stupid all at the same time.
Yep, that's very true.
Oh, yeah. Yeah, because, like, if I put a tax return together for somebody, it'd be, you get a deduction, you get a deduction. I would be like the Oprah of deductions.
Yes, you'd just be giving everybody deductions
Yes.
left and right. Yeah.
How much is the air you breathe worth?
Well, I can only imagine the audit letters that would come in after that.
Well, and that's what we're talking about today. And that's why I bring that up. I would be the Oprah of audits probably, too.
Yes.
You get an audit, you get an audit, you get an audit.
I could see that happening.
How do people get audits?
How do people get chosen for an audit?
Yeah, the IRS says you.
Okay. Well, when a taxpayer files their tax return, it goes into the IRS's computer, and the computer gives it something called a DIF score, which
A
DIF score. Yep.
Wow.
Now the IRS.
What does that mean?
It does stand for differential income something.
Fluctuation.
Yeah, something along that line.
Not
yes.
flowability.
Yeah, and
That would actually sound kind of cool.
I did, but it does stand for something. I can't remember the exact
It's all
wording
right.
of the acronym right off the top of my head. But
She's had a long morning with me. That's why she can't remember
that is
it.
true.
Yeah, it is true. And our new son,
Yes.
all 4.5 pounds of him.
Yes.
Pure
and-
chaos.
And 4 feet.
Phew, he's something.
He is something. He's a
He
handful.
loves his mama.
Well, he's a mess. That's all I can say.
Sorry. Back to the show.
Yeah. So let's go back to this IRS
The DIF.
computer.
The DIF.
And this DIF score. So basically, what this computer program does is it gives the return a score. It looks at a bunch of different variables and components of the return that make up this DIF score. And if the return scores over a certain number, then that return is flagged for an auditor to actually pull the return and go through it. If when the auditor does that, they think that there is substantial reason to audit this taxpayer, then they will initiate the audit.
Are they taking into account possible mistakes, possible fraud, possible I have no idea what I'm doing? They don't care. It's a number on a piece of paper.
Right, it's a number on a piece of paper, and we do know some things that will lead to a higher DIF score. For example, if you show a loss on a Schedule C business that is substantial, that can definitely be a flag for an audit. The IRS wants to make sure that that loss is indeed a true business.
Especially a huge one.
Yeah, especially a larger one.
Right.
We know those things kind of flag taxpayers who get earned income credit, which is a low income credit. If they have a Schedule C on the return that's just income and no expenses, then that can also flag, because sometimes people do that just to get their income to a certain level to qualify for that earned income credit.
Okay, so this DIF score, basically they've set up a criteria and they weight, as in weight, WEIGHT,
Yes, different factors.
different factors.
Okay. Another thing, if you have itemized deductions of $120,000 in itemized deductions and your income was only $60,000, you can see that it's just not realistic numbers. That's another thing that will flag if the numbers are just out of character for your income level. They also do a lot of statistical data capture when you file a tax return. So if you are under a certain profession and your income is normally this and your deductions are normally that, and then someone else under the same profession files a tax return and their deductions are way out of line with everybody else within that category, that also can flag. So there's definitely some weighted value to different things.
Now, they set up more or less profiles for almost every industry known to man. Do they not?
They do.
You're an agent. You're a real estate agent. You're an insurance broker. They know.
Right. And if you're a small business owner, you may have noticed on your business schedule, you have to put your business code, your
Is that what that is?
industry standard classification code.
That's what that is.
And the reason you have to put that on a return is that's how the IRS gathers that statistical data as far as what is normal. I mean, real estate agents, their automobile expenses are going to be high because they drive a lot.
Yeah.
And the IRS is going to expect to see that because it's a norm.
Right.
But as an accountant in an office, if my automobile expenses are extremely high, that could be a flag because accountants don't normally drive a lot.
Don't drive a lot.
Right. We're working inside our office.
Right. You have an office, people come to you.
Exactly. So, different types of industries have different flags as far as
Different profiles.
Exactly. If the deductions are not within the norm for a business in that industry and at that income level, those things can trigger.
Pure opinion, do you think AI is going to, they're going to use AI to do this?
Oh, I would definitely think so.
I'd be shocked if they didn't. Now, being as the federal government, it might take them 15, 20 years to do it. Ha.
Well, that's true.
But do you think that is going to be a detriment or a plus to the taxpayer? Because technically AI should get good enough to where it's spot on. It's not just a simple algorithm. It knows.
Right.
That may actually help the taxpayer.
Possibly.
I mean, we don't know. It's the future.
Exactly. And what the IRS does with AI specifically.
Well, it's true. It only learns what you put into it, I guess.
Exactly. Is
Yeah.
a whole nother question that we're not sure.
Yeah, well, it's early. It's early.
How AI will impact the IRS's.
So do you think that I always, and I don't really joke, but I always ask the question, what happens when AI realizes that humans are the problem? Do you finally think that tipping point, the tipping point is when AI learns the tax code and it just goes bonkers, and that's when the Terminators show up?
Well, it could very well be.
It could very well.
I can tell you that ChatGPT, someone had it take the CPA exam and it failed miserably. So
Did it really?
It's not there yet.
It's still learning.
It's not there yet.
But since we started this episode, it's like 5 million times smarter now.
Oh, I'm sure it
At
just
least.
involves
Yeah.
every single day. It's incredible on what AI can do, but it's also kind of scary on what AI
Telling
can do.
Terminators, don't blame me. Just saying. All right, let's get the fun out of the way. The letter shows up in the mail. IRS, I like to call them nasty grams. The IRS says, hey, XYZ Corporation or whoever you are, we're going to audit you.
Okay.
Basically, they're saying you're guilty, prove you're innocent.
Unfortunately, that is true. You are guilty until proven innocent in the eyes of the IRS. It's not the other way around.
That is so wrong.
Right.
But now, backtrack on that. The IRS does not call you.
No.
Hello, XYZ Corporations. We're going to audit you, but if you go buy $1,000 worth of Amazon gift cards and call us right back, we won't do it.
Yes, definitely don't fall for those
They do not call you.
They do not. You will get a certified letter in the mail if you're chosen for audit.
And they mean business.
And they do. They also don't email you.
I was about to ask.
We're going to
They email you.
audit you. Nope. You will get a certified mail. They have to prove that you've been served with the audit paperwork.
Do they have to prove when they sent it?
I don't know on that they have to prove when
They
they
need
send
to.
it. Yeah, well.
That's
with
like
the mail.
that's a tax attorney question.
Well, that all comes down to the issues that we're having here in the state.
That's why
of
I brought
Georgia
it
with
up.
The mail,
3 weeks later, boom, you got something that should have been delivered 3 weeks ago.
Right. But if they're sending it certified mail, there should be a date on
date
there
on it.
on when it was sent.
Because now when they send you that, hey, we're going to audit you, that's a ticking clock.
It is a ticking clock because the audit letter will give you a certain amount of time to respond. Now, let's back up for just a minute because there's really several different types of audits that a taxpayer can go through. The first one is what's called a correspondence audit. And this letter basically says, we want to see proof of deductions X, Y, and Z, gather that information, and mail it back to us. Okay, so that's the first type of audit. And it's usually...
Now you have to mail it.
You do have to mail it.
Can you fax it?
Normally, you can't fax it. Now, I have had cases where I've had taxpayers actually take the information to the IRS audit
Physically
office.
take it to them if they can, if they're capable.
They can.
Yeah.
Because, as we were discussing earlier, the mail can have issues.
Right.
If you're going to mail it, you definitely want to get it mailed with proof of mailing, return receipt, and tracking on it so that you can prove that you did mail it. But that's the first kind of audit. It's what's called a correspondence audit. And that's usually out of all the audit types, if you get that one, that's usually the most lenient audit. The second is what's called an in-office audit. And in that type of audit, the auditor says, come see me.
I want to hear all about that. We're going to take a real quick break because what we're about to talk about is uber important.
Okay.
Here we go. Are you paying too much in taxes? Who isn't? Taxes are the highest expense small businesses face. Maximize your return on investment. Reduce your tax bill. Tax planning and tax resolution strategies, the art of keeping more money you've worked hard for. Schedule your free tax planning consultation by visiting bottomlinega.com. That's bottomlinega.com. Jacqueline, you still there?
I am still here.
Good deal. Really cool commercial you got there.
That is a cool commercial.
Very, very cool. Very cool. All right. We were talking about audits. We were joking around a little bit, and then we got really serious. Because when the IRS says they're going to audit you, they're going to audit you.
They are.
And I think I made comment of ticking. It's a ticking clock.
It is a ticking clock.
You just mentioned right before break an in-office audit. That sounds scary. Now, are they coming to your office or are you going to their office?
Okay, so in an in-office audit, you are going to their office.
You're going to their office.
So they will tell you to gather your documentation and all of your information, and you're to bring it in on a scheduled date and time, and you're supposed to actually sit there and meet with the auditor. Normally, these will run 4 to 6 hours of your time during the day sitting there and going through
That
everything
sounds
with the
exciting.
auditor. Yeah, it definitely is not the best way to spend your day.
Now, is there an IRS office on every corner?
There's not one on every corner. Depending on where the taxpayer lives, that oftentimes can determine whether they're going to do an in-office audit or whether they're going to do correspondence. But
They're in major cities?
yeah, in the Atlanta metro area, you are going to go down to the Chamblee office.
Okay, in Chamblee. Mm-hmm. When someone is summoned, lack of a better word, summoned to go to one of these in-office audits, do they go by themselves? Do they hire an attorney? Do they hire an accountant, an EA like yourself, a CPA? Do they bring their preacher with them? I mean, honestly.
Right. Well, I'm going to
Need an entourage to go.
Right. Well, my recommendation is never represent yourself in an audit. Always hire a tax professional to represent you. I can give you nightmare stories of clients who have tried to represent themselves, and let's just say that it didn't go well.
Oh, I want to hear about that. But who is a tax professional?
Okay, you're going to want someone that is covered under what's called Circular 230, which means they're allowed to represent taxpayers before the IRS.
That's like a certification or something.
It is. So this will either be a tax attorney, a CPA, or an enrolled agent.
And what we call an EA in the business.
Yes, an EA.
You are an EA.
I am an EA.
What separates an EA from a CPA?
A CPA gets their licensing from the state accounting board.
Uh-huh.
An enrolled agent gets their licensing from the IRS.
Gotcha.
A CPA has to do CPE, but they can do things that's more on the accounting or marketing or running a firm kind of educational classes. Enrolled agents, we have to take all of our CPE classes have to be in taxation. So bottom line, an EA is pretty much a tax accountant, whereas a CPA may or may not even do taxes. I know CPAs that do not do tax returns. So it really just depends on where that CPA is and how they're
A
operating
CPA
the
can
business.
officially certify something.
They can't officially certify something. Now, that's another difference between a CPA and an EA. If a client needs certified financial statements, then they're going to need a CPA to do that. An enrolled agent cannot issue certified financial statements.
You cannot certify them. You can get the financial statements
Right.
together.
We prepare financial statements
It's the same
all
statements.
day long.
You cannot certify
We
them.
just can't certify them. And really, the only people that need certified financials are publicly traded companies.
Right.
Because they have to release this information out to
Well,
their
they're
stockholders.
beholden to their shareholders. Yeah.
Exactly, and it's got to be certified that what they're telling their
Right.
stockholders is correct information,
Right.
so they're not misleading stockholder to invest more money in their company.
All right. So someone's going down to Atlanta to sit in on this marathon audit. Do they go with their tax professional or do they say, Jacqueline, here, please? Only give me good news. The rest I don't want to hear.
Right.
What happens?
Well, I've done it both ways. I've had the taxpayer go with me, and I've done audits for taxpayers just on my own without the taxpayer being there. Oftentimes, the auditor will request that the taxpayer be present. You can get around that. There's nothing that legally requires the taxpayer to be present as long as they have representation there.
As long as the taxpayer knows that.
Yes. Yes, definitely. Now, if a taxpayer goes with me on an audit, if I'm representing someone, then we always go through and have a conversation beforehand.
You give them the don't say a word conversation.
Well, the problem with audits is the taxpayer goes down, and obviously they're nervous about sitting in front of an IRS auditor, and oftentimes they say too much, and that can get them into a lot of trouble.
I can imagine.
I'll give you an example from a colleague of mine that was sharing a story on one of his clients who was audited. This client actually went to the audit on their own. They did not take representation. And the auditor was sitting there talking to the taxpayer, and the taxpayer was a mother that had small children. Auditor was talking about, hey, it must be great that you can work at home because then you can watch your kids while you're working. It must be a great situation. And the taxpayer said, yes, my kids actually sit in my home office and they watch TV and they do puzzles and they play in the floor there as I'm doing my work. Well, because of that statement that the taxpayer made, the auditor disallowed the home office deduction on that return because in order to take that deduction, the office has to be used regularly and exclusively for business. So when she said her children sit there and play or watch television, that basically tanked her home office deduction.
That was the end of that.
That was the end of that.
Now, from experience, you and I take that very seriously. We don't even let the cats, our babies, into our offices at home. We don't. We close the door.
We do close the door, but there's other reasons than just exclusive use.
Well, that's because I'm auditing. Wow, I'm editing audio, and you don't want to hear it half the time.
Yeah,
but we do keep the cats out.
We do, and if you let them in and they climb on your desk, then all my paperwork is
Well,
going to
that's absolute chaos at that point too.
So we don't do that.
But we keep them out. Auditor, man, lady, we keep them out. We really do.
Right. And, there's just some other things. When you go in for an audit, you want to make sure you have everything that the auditor asks for, but you don't want to offer additional information.
Right.
You want to answer the questions yes or no. You don't want to elaborate on things because then you can open the door for them to question other things on your tax return. So you have to be really careful about what you say.
But you shouldn't be answering anything. Your professional that you have with you should be answering everything.
Yeah, pretty much. Now, I do tell, if a client goes with me to an audit, I always tell them if the auditor asks you a question directly, pause for a second before you answer. Give me a chance to jump in and either restate the question so that you understand what they're asking and so that you don't give an answer that could possibly cause you problems with the audit.
Is there a law that says, I'm the auditor, you're the taxpayer, you must answer my question? There's no law that says that.
There's no law that
You're not
says
raising your right hand, putting your other one on the Bible in front of a judge.
No.
You're not under an oath.
You do have to give
Provide an answer, but it doesn't say you have to give
accurate
it.
information. And I always, like I said, I like to restate the question. So I tell my clients, just pause for a second, give me a chance to either jump in and answer on your behalf or restate the question for you so that you understand why the auditor is asking that question, and it'll help you make sure that you don't give more information than you necessarily
Or they
need
ever
to.
patented. I defer to my tax professional.
Exactly.
Jacqueline, what do you think about that?
Sometimes that's the best way to go. And then, while we're on the subject of audits, let's go to the third type of audit.
Oh, I'm sorry. Yet there's more.
There's one more.
Oh, wow.
And that is, and you kind of alluded to this earlier, this is where the auditor comes to your business location. Now, if you're going to get what's called an on-site audit, this is usually the most severe type of audit.
They really, really mean business?
They really mean
now,
business.
Odds are you're what, a Republican? Sorry, that was a shot.
That was horrible.
That was horrible.
So.
But is that why, honestly, you always, not when I say you, I say that rhetorically, not Jacqueline. I say you rhetorically. That is why you always lock your front doors, all your doors, so people can't just walk in.
Well, there again, auditors can't walk in without notifying you ahead of time that they're coming to give you the right
like 8 seconds.
To have your representation there in front
Hey,
of.
I'm standing in your front. Now, they will call you on that. Will they call you or will they mail that warning?
Well, normally it's certified mail as well. It will tell you that the date and the time that the auditor will be there, and then it will tell you if that is not a convenient time, you need to call and reschedule on a different date or time if you can't be available to the auditor on the given time.
But now just yanking them around, calling them up, I won't be available on Thursday at 8, but on the 30th at 2 p.m. I'll be available, and then you call them on the 29th. That's not going to help you.
Right, it's not going to help you at all.
But now, do they tell you, warn you, hey, we're going to be looking at XYZ, have this ready for us, or are they just going to come in and say, everyone on the floor, we're going through every inch of this place.
Well, there again, it depends on the reason that the taxpayer was chosen for audit. If they consider fraud, then they can ask for everything. Normally, they will ask for specific things like, I want documentation for your cost of goods sold, or I want documentation for your automobile expenses, and usually they'll pick 3 or 4 different categories on the tax return. They can, once they get into the audit, open the scope up into other things, but there again, that's why being very careful about what you say and not offering too much information can be helpful, because sometimes what a taxpayer says will open the door for them to audit something else.
I was about to say, this audit could lead to another audit, and down the rabbit hole we go.
Right. Well, they can ask for other things within the scope of that audit, but then normally if there is an audit for 1 year, they will audit at least 1 additional year back, if not 2.
But now if they claim, hey, we think there's fraud, they can go back to day 1, can they not?
Now, yeah, in the case of fraud, if they can prove there was fraud on a tax return, they can go back to day 1. There's no statute of limitations.
They have to prove it first?
Well, yeah, they do have to be able to prove that they would have to audit you for a year and be able to prove that there was fraudulent numbers on that tax return.
I got you.
Once that's been proven, then they could go back. Because normally your statute of limitations for an audit is basically 3 years from the return the time is filed.
Right, unless they suspect fraud.
Right. So they have 3 years. You file the return, the clock starts ticking. You have 3 years until that return hits the statute of limitations for audit. Once you're beyond that, technically they can't audit that return unless they audit a year and they find fraud. If they find fraud, then that statute of limitations is out the window. They can go back as far as they want to.
Because you've committed a crime at that point.
You have committed a crime.
It's more than just interest and penalties.
Yes, in the case of tax fraud, it gets really ugly really quick.
Really?
So you definitely, in that case, you need a tax attorney.
Right.
If you're found
right.
that you have committed fraud on a tax return. So it's never a good idea to file a fraudulent tax return.
Well, at least hopefully not knowingly.
Yes.
All right, before we get out of here, I know you have all kinds of weird stories. Some of them are some stranger than fiction kind of thing. You had someone almost have heart attacks.
Over an IRS audit?
Yeah.
Yeah, I can share a quick story on that. I did have a client that came to me a few years back. They were a small business owner. They were not our clients. We had not prepared their tax returns. They got chosen for audit. They tried to contact the CPA that had prepared their returns, and that CPA would not return their calls.
Oh, wow.
So the taxpayer decided that they would go and represent themselves in front of the IRS. And as we've talked before, that's never a good idea. And in this case, it definitely wasn't. She went down. She sat with the auditor all day long. She left from the audit. A week or so later, they got a IRS letter saying that the balance due on the year that was audited was over $60,000. And at that point in time, her husband did almost have a heart attack. He was in panic mode, obviously was a big shock, and he wasn't sure what to do. He actually talked to a friend of his that was a client of mine, and that friend recommended that he come and he talked to me about it to see what they could do. So they came in, met with me. We kind of went through everything. I asked for audit reconsideration with the auditor and had the taxpayer gather all the information we needed. And I went back down for the audit reconsideration meeting, and I was able to get the balance due down from 60 some odd thousand to about 14,000.
Wow.
On audit considerations. There was a big difference, and that just kind of goes to showing you what the power of a tax professional can do for you, because they know what the auditor's looking for. They know how to argue certain points in the taxpayer's favor, what the law is. So definitely having a EA, a CPA, a tax attorney represent you in audit is definitely never a bad idea.
It's an auditor's job to do audits. It's what they do every day. Who knows how many they do a day? Who knows?
Right.
1 or 2, who knows? At least 1. But that's their job.
Yes.
They are trained.
Yes.
It's kind of like a Major League Baseball pitcher. He throws the ball from a mound. That's his job. He's really good at it. He wouldn't be in the major leagues.
Right.
A business owner, a regular everyday Joe who gets an audit, a taxpayer, is not trained to go into an audit.
Yeah, that's correct. And from the auditor's side of things, it's the auditor's not going to sit there and tell the taxpayer, well, if you'll give me this or you'll do it this way, I might accept it.
Right.
The auditor looks at what you brought them, and if that's not what they wanted, then they say disallowed and they move on.
Exactly.
They have a certain time frame to close an audit. They can't
Right.
keep audit open for weeks and weeks and weeks waiting on the taxpayer to redo or resend or resubmit. So it is in their best interest to close this audit as soon as possible. So if the taxpayer doesn't come in prepared, doesn't have everything the auditor needs, then it's real easy for the auditor just to say, I'm going to disallow this and move on.
Mm-hmm. I hate to say this, but an auditor may ask for something that you don't have to give them.
That is true. I mean, there are certain
And
things within the law
If
that
taxpayer doesn't know that, they automatically, well, the auditor's asking me for it, they must be right.
right.
The tax professional realizes, oh, you don't have to do that.
Right. That is true. And I can give you an example of that. If the taxpayer has expenses that the individual expense total is less than $75, you're not required to give a receipt in audit if it's less than $75 per item. So that's something that a lot of taxpayers aren't aware of. So if the taxpayer
But the auditor is.
Right. But if the auditor asks you for all your business office supplies, I want every single receipt. Well, if you go through your list of numbers, anything that's under 75, you don't have to give a receipt. Now, you do have to show proof of payment, which is either canceled check or your credit card receipt showing that you actually paid Office Depot or whomever you purchase your office supplies from. But there's just certain things like that taxpayers aren't aware of.
Right. And auditors, it's their job to exploit that.
Exactly.
Call it what it is, folks. Didn't say it was fair.
Well, and I'm sure, and the IRS will not admit to this, but
Of course
I'm
they
sure
can't, no.
I'm sure auditors, their pay scales or their ability to get promotions within the IRS has a lot to do with how much money they can collect in audit.
I'm sure there's a dynamic there.
Definitely, just in any other type of business.
If your job is to audit whether the money is owed or not, and you're not producing any return, the first assumption is you're not doing your job.
Right.
You don't care. Why do you even show up?
Right.
That's the way you're viewed in any industry, not just in that.
That is true.
That's the way it works. Like being a podcast host and never doing a podcast. Are you really a podcast host? It's funny. But anyway, sorry. What else do we need to talk about? Are we getting out of here now?
I think we're about wrapping it up.
This has been a lot of fun, Jacqueline.
Yeah, well, I don't know
It's
that
exciting.
that audits are exciting.
This is exciting.
Especially if you're the taxpayer receiving the IRS letter. But let me just say this. First things first is don't panic if you get an IRS letter. Second of all, definitely consult with a tax professional. Don't try to do an audit on your own. There again, we've shared a couple stories today about people trying to represent themselves and it didn't go well. So you definitely don't want to represent yourself. You want a professional to represent you, even if it's a correspondence audit. Meet with a tax professional. Let them go through and tell you exactly what the auditor is going to want. If they're auditing automobile expenses, then we can talk you through exactly what information you need to provide and how you need to provide it to be able to prove your point. So don't panic, number one. Number two, get with a tax professional. And number three, don't ignore it. I've seen that happen time and time again. People will get an audit notice and they panic, and instead of taking care of it and taking the next step, they kind of set the letter to the side on the back burner, hoping that it's just going to go away. Well, I can promise you, if you've been selected for audit, the IRS is not going to go away. One way or another, end up having to defend yourself in this audit. So don't procrastinate. Go ahead and take care of it as soon as possible. These letters are going to give you dates that you have to submit information by. You want to make sure that you do it by those dates. You want to be as compliant with the auditor as you possibly can. There are certain situations where maybe you have to ask for an extension of time to gather information depending on what's going on in your life. But for the most part, try to meet those deadlines. Try to do everything you can to make it easy for the auditor to get through your information, to close this audit out, and move on to the next person.
Well said.
Thank you.
Well, ladies and gentlemen, we're going to wrap it up. I'm Tom. She's Jacqueline. And that's the bottom line. For more information on today's topic, reach out to Jacqueline and her tax professionals at Bottom Line Tax Solutions, 678-866-4048, or visit bottomlinega.com for all your tax planning, tax preparation, and tax problem-solving needs.